Welcome to the Riskwiser Zone, the show where we dive into the world of stocks, finance, and global events that shape our economic landscape. I'm your host, Lewis, and we're excited to have you join us today. We're starting off with a significant development in the global markets, as stocks have seen a notable rebound from their lows during the Iran war. The S&P 500 futures are up, and there's a sense of optimism among investors that the conflict may be nearing a resolution. However, it's essential to approach this news with caution, as the situation remains fluid and unpredictable. According to recent reports, the US and Iran may be making progress towards a near-term resolution, which could lead to a decrease in energy prices and a subsequent boost to the global economy. The reopening of the Strait of Hormuz is a critical factor in this equation, and any developments on this front will be closely watched by investors and analysts alike. In other news, the bond market is also reacting to these developments, with U.S. long bonds rebounding during the New York session. This has sent the 30-year yield back below 5%, indicating a shift in investor sentiment towards a more positive outlook. Meanwhile, the artificial intelligence sector continues to make headlines, with companies like Anthropic PBC unveiling new AI agents designed to handle a broader mix of financial services tasks. This is an area that we'll be keeping a close eye on, as the potential implications for the financial industry are significant. As we navigate these complex and interconnected markets, it's crucial to remain informed and up to date on the latest developments. On the Riskwiser Zone, we're committed to providing you with fair and balanced analysis, helping you make sense of the ever-changing landscape. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into a fascinating story about the crypto industry and its latest developments. Coinbase, one of the leading cryptocurrency exchanges, has announced a significant reduction in its workforce by approximately 14%. This decision was made by CEO Brian Armstrong, who cited the need for adaptation in response to accelerated workflows driven by artificial intelligence. According to Armstrong, AI has enabled engineers to complete tasks in a day that previously required weeks from entire teams. Non-technical staff are now handling production code, which has led to a flattening of the company's structure and the elimination of roles filled only by managers. Impacted employees will receive at least 16 weeks of base pay, 2 additional weeks for each year of service, their next equity vest, and 6 months of COBRA coverage in the United States. While some may view this move as a strategic response to the rapidly evolving crypto landscape, others are skeptical about the true motivations behind these layoffs. OpenAI CEO Sam Altman has warned that tech companies might blame unrelated layoffs on AI after a period of overhiring during the pandemic. It's essential to consider multiple perspectives and not jump to conclusions. The crypto industry as a whole is facing significant challenges, including reduced profitability for Bitcoin miners, increased hacks in decentralized finance projects, and criticism about the sector's direction. Some companies are pivoting towards new revenue streams, such as AI, while others are abandoning crypto altogether. As we navigate this complex and ever-changing landscape, it's crucial to remain informed and nuanced in our understanding of the issues at play. We'll continue to monitor developments in the crypto industry and provide you with balanced insights and analysis. Welcome back to the Riskwiser Zone, folks. As we wrap up today's show, I want to bring you a story that's been making waves in the tech industry. Coinbase, the largest cryptocurrency exchange in the US, has announced it's cutting hundreds of jobs, roughly 14% of its staff. Now, you might be thinking, what's behind this move? Well, according to CEO Brian Armstrong, it's all about embracing artificial intelligence. Armstrong says AI is changing how the company operates, and they need to adapt to stay competitive. He believes that by leveraging AI across every facet of their jobs, they can become more efficient and lean. But what does this mean for the employees who are being let go? It's a tough reality check, especially in an industry that's already experiencing significant volatility. Now, I'm not here to pass judgment on Coinbase's decision, but it's worth noting that this isn't the first time we've seen a tech company prioritize AI over human labor. Block CEO Jack Dorsey made similar moves earlier this year, cutting 40% of his workforce due to advancements in AI tools. It's a trend that might continue across the industry, unless, of course, the AI bubble pops. As an investor, it's essential to stay informed about these developments and consider how they might impact your portfolio. Coinbase's stock has taken a hit following the layoff announcement, down over 2% as of today's writing. But it's not all doom and gloom. Some experts believe that embracing AI can lead to long-term growth and increased efficiency. As we close out today's show, I want to leave you with a reminder: the tech industry is constantly evolving, and it's crucial to stay adaptable. Whether you're a seasoned investor or just starting out, it's essential to keep your finger on the pulse of these developments. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.